Welcome back. Cybersecurity, a major concern in the world today. What are companies doing to prevent a massive breach? Joining me right now is the CEO of Allstate, Tom Wilson. Tom, good to see you.
Nice to see you.
Thanks so much for joining us. I want to get to really the story of the economy and growth, but let me stay and kick it off with cyber first. What is Allstate doing in terms of all of the threats that we face today?
Well, cyber is a big risk for everybody, particularly us, because we don't, all of our assets are online. So we're focusing on really four things. First is the technology, second people, third place, fourth time. So on technology, make sure they can't break in, they can't get people's passwords, that you segment your data. The people part is really important too, because most of the break-ins come through phishing campaigns. So you got to train your employees not to click on that little nice attachment, because then a piece of malware comes in with it. On the place, you got to make sure people can't walk in your facilities, walk in our agent offices, and get on somebody's computer. And time is another one that we've spent a lot of time on, which is, think of it like a medical issue. If you had a medical problem, you want to deal with it quickly, and you want to have a doctor. So we have a very good escalation process. So anything happens, it escalates up through the company. And then we have a series of external experts from the federal government to private companies that when we have a problem, they know us. They know our systems. And so we call them and we get help. So you really got to focus on it in a comprehensive way. But it's a big risk for all of America.
When we saw the company's earnings in the first quarter, a number of analysts were talking about strong homeowners results, but they were questioning growth. Where does growth come from at Allstate in the coming couple of years?
Well, growth in Allstate's coming from, we have really two segments that are growing pretty rapidly. One is the Allstate business, which is growing at about 3% in terms of its units, which in the United States, which is where we do all our business, is pretty good, because there's not 3% more cars than homes in the United States. And then we have Esurance, which is our online business, which is growing at about 9%. So those are the two places we're growing. We need to make sure we manage our growth, though, because in the insurance business, sometimes growing is not a good idea, because you can grow by losing money.
So do you see a change in terms of auto rates, in terms of getting to that growth, given where we are in the economy? We've been talking all morning about the fact that we're really not seeing much in the way of growth for the U.S. right now.
Well, we're a big investor, too, so we think we're long the U.S. We think there's modest growth in the U.S. When you look at our business, we think there will continue to be modest growth. People are buying more cars. In terms of auto pricing, you are seeing more people drive these days, and so that's increasing the number of accidents and increasing the cost of accidents. So you're seeing a little bit of pressure on auto pricing with us and other people, where rates are up a little bit more this year than they were prior years.
What kind of risk, and how do you assess risk when you think about what's going on in international markets? Understanding that you're talking about U.S. business, what are the risks from the situation in Greece, the situation in China?
Well, we're a big investor, as I said, so we're mostly long the U.S., but that's by choice. So in terms of Greece, I think the Greece people have said we want out, so I think they should just get out. The money's spent, it's done. We ought to just go about and fix it. I don't think that's a big risk for the economy. China is a little bit of a wild card, because nobody really believes their numbers. And so, is it really 7% growth, or it's something else? And so nobody really knows. You tend to look at the commodity flows is what we do, commodity price flows. And it looks like there's a fair amount of softness in China.
Yeah, and you've got softness in commodities. I mean, look what oil, iron ore, copper has been doing. That represents a big risk.
For us, China is a little bit of an anomaly, because you really don't know what their numbers are. So like in the United States and Europe, we've been talking about transparency, and you can understand the economic numbers, and they change a little bit like that, but we know where they're solid. In China, I think sometimes they just make it up, It's like, and so you're kind of like, do you really want to trade on those numbers or not? So we look at the outputs of their economy.
And in a world where you're seeing low growth levels, companies have to find growth somewhere. In your business, we've begun to see it through consolidation.
That's true.
So you've got the Chubb deal and Ace. What's your reaction to that deal, Chubb and Ace merging?
I think it looks like strategically and economically a pretty good transaction. They have enough things where they do the same thing, where they can cut costs, yet they're complementary to their product lines. And so it will, I think it'll be a good transaction.
How will that impact Allstate? And when you look at your business, given the consolidation around you, do you need to fill in some holes and get bigger?
Well, we're always looking to expand, but in terms of do we need to, I don't think we need to. So insurance, it's a lot of people, it's 3% of the GDP, so a lot of people think of insurance as one big bucket, but it's like a lot of little neighborhoods. And if you look at the health insurance business, Affordable Care Act drove a whole bunch of consolidations, so they're all merging. If you look at the reinsurance business, the entrance of new capital into that market has caused a bunch of them to consolidate. In the commercial lines, where Ace and Chubb are, it's yet to be determined whether this will be the starting gun for consolidation in commercial, but I know a lot of people are thinking about it. We're in the personal lines business, and about half of our industry is controlled by mutual companies, which aren't subject to the same pressures as us. So I don't think this is the starting gun for consolidation of personal lines.
I see. And then the regulatory environment is another part of the story in terms of growth and how the company positions itself. Got a number of insurance companies pushing back on what the government deems as systemically important.
Yes.
Tell us about the regulatory environment and how it's impacted your company.
Well, our company is, of course, regulated at a state-based level. We used to have a bank. I shut it down because I didn't want to be regulated by the Fed and be a SIFI.
Exactly.
That was a good choice.
That's what GE's doing, and Jeff Immelt and everybody else.
Yeah, well, we did it early. My comment to some of my compatriots was, this is like Hotel California. You can check in anytime you want, but you can never leave. So
Exactly.
we checked out early.
Yeah. Tom, it's great to have you on the show today.
Thank you.
Thank you so much for joining us. Tom Wilson from Allstate. We'll be right back.